Hello Australia, and welcome to the Strategy of the Week for Friday the 26th of July 2013. This is Dan Misch. I am the Director of Retirement Services for VectorVest, and as such I am happy to present to you tonight what we've titled the Retirement Trader's Toolbox. Now if you are a retirement trader, inside of your toolbox you would want to keep some market timing signals, your favorite searches, and a scorecard so you can measure the results of those searches over those various market timing signals. Well, tonight what we're going to use for a market timing signal is our VectorVest confirmed calls. For our what to buy, we are going to look through all of the searches that are contained in the retirement group. And we're going to measure those searches using both a 5 and 10 stock portfolio, and we'll tally all of those results on our scorecard so we know which ones are providing some consistency. The first thing we're going to do here in the VectorVest program is take a look at a 1-year market timing graph, and all I have plotted on here right now is the price of the VectorVest composite for Australia in the candlesticks, and the MTI is shown in blue down below. At the bottom of the graph, if I turn on the confirmed calls, we'll see those green and red arrows appear. And over the past 1 year, we've had 3 different confirmed up signals and 2 confirmed downs in between. So the first confirmed up came on the 17th of August 2012 and lasted until the 1st of November. And in order for that signal to be triggered, the price of our VectorVest composite had to have already risen for 2 weeks or 2 5-day trading periods consecutively. As well, the MTI has to go up above 1. And so you can see during this time frame, the price of the VVC rose, and it was a very good time to be in the market. When the price of the VVC fell for 2 weeks and the MTI fell down below 1, that was a good time to get out of the market. And once again, a good time to get in mid-December, staying in all the way until mid-March before the market went through a very nasty downturn. And we are back in a confirmed up, which was just issued on the 12th of July. So we're going to take a look at how some of these searches have done during these time frames. We've moved into the Unisearch tool, and here in the Searches Retirement group, we have 7 different searches that we can test. And all of these searches have some sort of a dividend component as part of their parameters, which is why we keep them in the retirement group. The first one, titled Dividend Bargains, must have a dividend yield of at least 2%. Dividend Elite looks for a dividend yield of 3%, as well must have a dividend yield, safety, and growth of at least 1. High Growth Dividend Payers looks for that dividend yield of 2%, but also looking for dividend growth of 20%. High VST YSG Stocks has that YSG of 1 as part of it. High Yield 2x10s looks for a $2 annual dividend and a 10% dividend yield. Those are pretty strict parameters for our Australian market, and so it does not return that many stocks. So for tonight's tests, this search will not be used. Similar story for optionable 2x4s, also looking for that $2 annual dividend and a 4% yield. This did not return enough stocks to test over the time frame, so this one will also be excluded. And finally, Top Performing Dividend Payers looks for a dividend yield of at least 3%. So beginning at the top once again with Dividend Bargains, the first thing I want to do is change our date back to that confirmed up call that we know was issued in August, as indicated by the green 17th date. By clicking on Run Search, we'll get a list of the stocks that meet those parameters on that date. And by running a quick test, I can change the date that the quick test ends and once again take it back so we're only looking from confirmed up to confirmed down, which was the 1st of November indicated by the red square on your screen, and rerun the test. So out of the 10 stocks that we were testing, 6 of them were winners, 4 were losers, giving us an overall gain average of 0.44%. That is an annual rate of return of 2.13. And what we also see here down on the bottom is how the VectorVest composite performed during that same time frame, 2.94% and a 14.13 ARR. And of course, looking at the list of stocks in front of you, you may have taken some gains from some of these ones going up quite a bit, and you probably would not stay in a stock that was down 50%. However, we're going to look at our averages for tonight. And so what we did is that same exact quick test over the same time frame for all of these searches, excluding the 2x10s and 2x4s. And here we have a table with those results. So again, 17th of August confirmed up, 1st of November confirmed down, 10 stock portfolio. We just saw the dividend bargain results. Dividend Elite had only 8 stocks returned on that day. 6 of them were winners, 2 were losers, average of just over 6%. High Growth Dividend Payers had 7 out of 3 winners, 3% return. High VST and YSG actually lost a little bit of money during that time frame, and it only returned 3 stocks, with 1 of them winning and 2 losing. And top performing dividend payers had 7 out of 3 with a 7% gain, and again that is all versus the VVC earning 2% during that time frame. Well, the next step we wanted to do is to see how a 5-stock portfolio performed versus that 10-stock portfolio. So staying with dividend bargains on the 17th, I'll open the quick test window and just change this down to the top 5. Now we'll see out of 5 we have 3 winners, 2 losers. Our average is 6.25%, and that's a 30% ARR. And so looking at a similar table for just a 5-stock portfolio, you can see the averages here of 6, 7, nearly 17% from high growth dividend payers. So this one shot up considerably. High VST YSG did not change because of the low number of stocks, and top performing dividend payers was also at 6%. So overall, during this time frame, the 5-stock portfolio performed much better, nearly 3 times the return. And of course, because we're only trading 5 positions, our commissions have been cut in half. So the 5-stock portfolio looks great from that perspective. So we have our scorecard built for that time frame. The next thing to do is come back into the Unisearch, and we will change our time frame to the next confirmed up, indicated by the green on the 19th of December. And we will go through the exact same process of running the search. We'll begin by quick testing the top 10, and of course we do have to make sure that we change our end date to the confirmed down indicated by the red on the 20th of March. We do have 10 stocks, 8 winners, 1 loser, 1 is unchanged. However, our overall return is up over 23% in that 3-month time frame. Well, that equates to an ARR of over 92%. And ironically enough, the VectorVest composite rose 2.94% during this confirmed up as well, so exactly the same as the last one. And that gives it an ARR of just below 12%. And here we are looking at our table of that confirmed up from December through March, and we had some very good results. You saw the 23%, Dividend Elite, 8 out of 2 for 13. High Growth Dividend Payers, 7 out of 3 for 8.5. High VST and YSG did much better during this time frame, returning only 8 stocks but giving a 10% return. And top performing dividend payers, 8 out of 2, with 11%. So we averaged 13.25% from these 5 searches during that confirmed up time frame with 10 stocks. And so we once again just went back, ran each search again, and did the test with a 5-stock portfolio. And we had some very comparable results to the 10 stock here. Nearly a 6% return on the low side to 19.3% on the upside. And so our average from these searches was still 13.25%. But once again, we're only trading 5 stocks now instead of 10, so our commissions are much lower. And so that 5-stock portfolio looks better from a winning percentage. The gains are comparable and those commissions are lower. And so over those 2 confirmed up time frames, using the 5 stocks, Dividend Bargains and Dividend Elite were the best performers. So let's go in and take a little bit further look at what constitutes those 2 searches. Beginning with Dividend Bargains, we already know it must have that dividend yield of 2%. The stock's recommendation must be a buy on the day that you run the search. And these stocks are going to be sorted by the value divided by the price. The next search, Dividend Elite, states that the stocks must have a VST of greater than or equal to 1.3. So we are looking at a higher quality stock. The dividend yield must be at least 3%. And this must have that yield, safety, and growth vector of at least 1. And these stocks will be sorted by VST. And so we know those have been performing well during the previous time frames. When we knew this confirmed up was getting ready to be triggered here on the 12th of July, we would have been ready. We may have built some watch lists with our searches from Dividend Bargains or Dividend Elite. Or what we can do is just go into the Unisearch and click on that green square, the 12th of July, running Dividend Bargains on that date. A quick test of the top 5 shares shows us that we have 5 winners out of the 5 shares, giving us an average gain of 7.3%, with one very high flyer in there, ALU, already up nearly 27%. And that's versus the VVC being up less than 1%. Now the stocks from Dividend Bargains are going to be sorted by the value divided by the price. So you might get some cheaper stocks showing up in this list of Dividend Bargains, hence the name. Looking at Dividend Elite on that same date of the confirmed up, due to the high VST number and the YSG above 1, you may find some higher quality, higher price stocks from this search. And quick testing those top 5 shows that all 5 are also up, slightly less than 1%, keeping pace with the VectorVest composite at this time. Well, that's how we are benchmarking our retirement searches to keep us ready for other confirmed calls which will be triggered in the future. If you have questions for us, please call the number on your screen. Thank you.